Craig?
Yes.
Yes.
One moment, please.
Okay, we're going to have a presentation today on the housing. And Craig Capello, who is our communication, publication, and a research person, will be introducing Maurice Muhammad.
Well, good evening, everyone, and thank you for joining. Today we have a very exciting presenter who is going to share some really good insights into housing. Mr. Maurice Muhammad. He's with the Progressive Realty in Allentown, Pennsylvania. Mr. Muhammad was first licensed in the year 2000 in the state of New Jersey. And he has gone to real estate school to learn how to be a better landlord to tenants, to manage his real estate properties. He is on the business side of real estate now, and he is going to provide us a comprehensive presentation on this topic. After acquiring a New Jersey real estate license, he moved to Allentown in 2004, where he worked for Progressive Realty. It was then acquired, he then acquired a broker's license in 2006 and purchased Progressive Realty in 2008. He has, as a realtor, he's also been a part of a real estate school, a Touchlight Real Estate Academy. And he'll be sharing all of that. He's also a property manager, notary, and founder and past president of the Allentown chapter of the NARED, National Association of Real Estate Brokers, one of the oldest trade associations in existence. Established in 1947, when Black people and people of color were not allowed to sell or own real estate. He's a husband, a father, of a blended family, and grandfather. And he's going to now present us to provide us with more insights, as I indicated, on this exciting topic. And I share now the Zoom with him so he can proceed. Thank you.
Thank you for that, Craig. Thank you so much. And thank you all for having me and the opportunity to share some real estate, experience with you all. Yes, my name is Maurice Muhammad, and I'm a full-time professional real estate broker, licensed in New York, New Jersey, Michigan, and Pennsylvania. The purpose of the presentation this evening really was to share my experience and relationship with NID and NID-HCA and the MOU that the NAACP shares with the NID, National Investment Division, which is an affiliate of NARED. NARED is as you stated, the National Association of Real Estate Brokers, was established in 1947, as a result of, as you also stated, that, when Blacks and people of color were not allowed to sell real estate, it was really a tough times. It was before 1968 when the Fair Housing Act was passed. So we share common values, as similar values as to what the NAACP share as it relates to real estate. And the NARED's mission statement is democracy in housing. So NID has a national MOU with the NAACP as its preferred housing counseling agency. Several of NID's counselors or branch managers hold joint housing counseling events with the local NAACP branch offices. Many NID counselor CBOMs is what we call them, which is short for branch managers, also serve on the local and state NAACP housing committees. At least 4 serve as chair of the housing committee across the country. One I could think of in Florida, I believe he serves as the chair, and I believe in Louisiana, if I'm not mistaken. So NID and NAACP local offices do joint marketing in partnership with banks to sponsor home buyer and financial literacy, education outreach, and or actual counseling services events. So the local government agencies and elected officials also partner with these joint efforts when marketing to NAACP and other community group members. So those are the key 4 topics and points that I really wanted to kind of get across, and just to make available and avail, our real estate expertise with as it relates to this pandemic, and with emergency assistance, and and there's reports, according to reports that the pandemic has exacerbated housing instability for renters of color. And as when America has a cold, Black America has pneumonia. So there's another a study that shows entitled "The Urban Wire," housing and financing data suggests that COVID-19 is widening CE and income. So racial economic disparities in access to safe and affordable housing exited long before the COVID-19 pandemic. And new data from the U.S. Census Bureau suggests that the pandemic and its economic fallout is only widening these divides. So there was already, a lot of issues as it related to housing and, the lack of it prior to the pandemic, and the pandemic has exacerbated it. So what we're doing is with NID is we provide NID. We are a HUD approved housing counseling agency certified by HUD, and a HUD intermediary. So what we do is we provide counseling services, housing, first-time home buyers programs, and financial literacy to help to make sure and to help assure housing, and to put a stop in the gap of Black home ownership, Black and brown home ownership. There's a report, it's called the Sheba Report, and you can find it on NARED's website. And we've been doing this report, I want to say, since 2013. And every year this report is updated, and it's entitled the Sheba Report. And the Sheba Report spells out what's going on. It's entitled State of Housing in Black America. One of the most important things that stand out, one of the most prominent things that stand out in the Sheba Report is the disparity and the huge gap as it relates to Black home ownership, white home ownership, and Hispanic home ownership, and the median income as it relates to those 3. And in summary, the average Black person is worth, based on this report, and there's other reports that may give or take, is roughly $5,000 or $5,600. The average Hispanic person is roughly $12,000, and average white has an income of somewhere around between 101 and 112. So when it comes to purchasing a home, usually the rule of thumb is about 10% of whatever the purchase price of that home is what you're going to need to get into that home. So for simple math, if you're purchasing a house for $100,000, it's going to cost you probably about $10,000 of your own money you would need to get into the house. That would include the down payment if you're using, you know, an FHA type loan, which is 3.5% down. And that includes your appraisal costs, inspection costs, and closing costs, and et cetera. So you can see why that would be an issue if we, based on those numbers that we are using. So that's part of what we do and why information and helping to get the information out about programs, available down payment assistance programs that are available. In the state of Pennsylvania, there are programs that, one that we use a lot is one that you can get 5% of the purchase price of the home. So if you need 10% of the purchase price and 5% is available to you, that makes it possible for a large gap of people that that have the 2 years work history, which is one other requirement before you can purchase, and also the requisite credit, you know, the appropriate credit, 620 or above, right, depending on the lender. So oftentimes you'll find that individuals will have the credit and they'll have the work history, just not the down payment money. So really the intent of this partnership, and these partnerships can really be a bridge, you know, in that gap to make that information known and make it available to those that may or may not have information and know that those products and those programs are available. The 5% program is a great program. Of course, they come with some stipulations on which you're required to stay in the house for 10 years, or the unpaid balance you would have to pay back if you sell the house. You know, I don't want to get into the details of the particulars because it's not a program that we represent. It is a program that we use. However, the stipulations are that if you don't stay in the house for 10 years, you would pay a portion of it back, or the unused portion, or the unpaid back portion. So those are some of the programs that are available to homeowners that some may or may not be aware of. We also represent emergency rental assistance programs. So what that is based on COVID, you know, this pandemic has really impacted, you know, people really in a really big way, you know. And in my experience, I've been doing this over 20 years. And in my experience, when you see the numbers, there's a large number that's unseen of individuals that don't even come out, and, you know, that we don't even see about, you know, that we don't even hear of, that are affected. So I think the importance of is serving in a capacity where we can share information, you know, as two organizations and two organizations that share the same spirit of serving the underserved, I think is a real great opportunity to be able to help, to get individuals some help, to, if nothing more, educate individuals for when they're ready to purchase. We provide local housing counseling for those that may be losing their home and through foreclosure, or so we provide foreclosure prevention for that if one is maybe struggling as a result of COVID, or if one maybe have taken advantage of the forbearance. We offer assistance with communicating with the bank and helping with the application, and helping a lot of just things as simple as how to represent your budget, and, you know, what you should shave off your budget, what a good application looks like going into the bank, what is likely to get approved and what's not. You know, oftentimes when individuals go in to maybe begin to struggle and can't afford pay their mortgage payment, you know, they think that they should qualify for the loan the same way they qualified for it originally. And that's not true, because when you're qualifying for a mortgage or a modification product, Sometimes you may even be able to use income from a renter, someone that you may rent a room to, even so much so as someone, as a family member, an ex-husband or a boyfriend or a loved one that's willing to guarantee or author affidavit, sign an affidavit stating that they're willing to give you X amount of dollars per month. Some banks will even allow that. So it's not as strenuous and it's not as hard to get an approval. At the end of the day, the whole idea is for us to help people to stay in their home and to help more people of color become homeowners, because real estate is the beginning of the wealth, building generational wealth. Building generational wealth, anyone that is wealthy, real estate is going to be a part of their portfolio. Most wealthy people have real estate as a part of their portfolio. And so that's what we do as it relates to our core premise is really to help, serving the underserved. I'm a landlord myself, and I have, so I understand property management and some of the nuances and things that we would have to go through to navigate getting into home ownership. So when the opportunity presented itself to be able to possibly potentially partner with the NAACP and with local government agencies also, and elected officials, to partner in a joint effort, with marketing and getting information out and making it available to those that may need it, is something that really aligns with the mission that NID and what we do. So we partner with banks that will sponsor. And so we're looking forward to serving, looking forward to partnering with you all, and with you all and the organization and the executive board, and partnering with you all to help serving the underserved and making it possible. Fair housing is a very, very, very large component of what we do also as housing counselors. Fair housing, we also work with dealing with solar panels and just housing as it relates to real estate, and making it affordable and making it a better experience is what we do. We are from the spirit of service. We are in the spirit of service, and that is what we do. So as I mentioned, we have an MOU with the national. So there's an MOU on a national level between our national NID office and your national NAACP office. What that looks like on a local level, I'm very excited to see and see what that looks like, where we can partner up. And again, some of our branch managers are serve as chairs, or they serve on the committee as well. So NID was established as an affiliate, one of the affiliates of NARED, National Association of Real Estate Brokers. They have affiliates that deal with property management. There's an appraisal affiliate. There's a commercial division. There's a young realtist division. And we call ourselves Realtist, so there's Realtors and then there's Realtist. So as Realtist, that is the signature trade name of NARED members, like Realtors have the trade name of Realtors. Most members in NARED are Realtors members as well, because we have to be that in order to use the MLS in most cases. We are duly licensed or duly members, so to speak, what I would say. We are Realtors. What I say, most of the individuals that are in NARED are really, education is one of the biggest components. And if you ever run across any realtors, you'll be able to distinguish that they're that, because most of them they are really proficient in their craft. And that is a shameless bias plug for my fellow Realtist members, Realtist family. So I just wanted to share that. I'm hoping that if there's any questions or anything that I could answer, but I just wanted to share, that we're here to serve. We do have an office in Allentown, a real estate brokerage in Allentown, and it's separate from the NID. Today, the real estate office is the real estate office, and NID housing counseling is the housing counseling component. So they are separate entities. However, they typically go hand in hand. So I hope I was able to share, and I apologize for my blurred screen. So if there's any questions, I'm gonna open the floor up to answer any questions or anything that I might be able to add.
Okay.
Thank you, Ms. Redmond.
Mohammed, oh, you're welcome. I have a question. So you're saying that your organization help finance low-income people who are looking for housing?
So we don't help finance. What we do is we are a referral.
Okay.
Yeah. We help as a referral. We will becoming a referral entity. So we don't finance it. We would point you in a direction. Like the program I mentioned is a program that's a PHFA program, and
Okay.
they provide 5%. Yes, ma'am.
Okay, and so you actually counsel people, new homeowners, on how to go about purchasing a home?
Absolutely, yes. So we just put out our calendar for 2022 housing first-time home buyer counseling events. So we do first-time home buyer classes that will take you from beginning to end, from the beginning of the process all the way to the closing table.
Okay, what are some of the qualifications that are needed to be a first-time homeowner in your organization?
So anyone could be a first-time home buyer, and they don't have to be the first time that they buy a home. If they
Okay,
don't have a home in their name right at the current time and within the past 3 years, they're considered a first-time home buyer. So they could for some programs. So first-time home buyer would be, for one, a person that has never bought a home before, and then second, if they haven't had a home, they haven't owned a home in their name in the last 3 years. Qualification would be they would need to qualify credit-wise, depending on the bank, anywhere between 580 and 640 minimum score, being employed for at least a minimum of 2 years, and the requisite down payment and closing costs. Often you can roll closing costs into the price of the home. So sometimes there's other programs that I just mentioned. One, there's other programs that would allow you the ability to be able to help with the down payment. And if the home owner is willing to give closing costs, you can almost walk into the house with 2% of your own money, 3% of your own money. So there's different opportunities that are available. There's myths out that one may think that you have to have 20% of money in order to purchase a home. That's not true. Sometimes it's cheaper to own a home than it is to rent, especially at the rate rental prices is rising right now. So you can own a home sometimes for less than you're paying rent. So I believe those are the main requirements. Those are the requirements that will qualify you to purchase. 2 years work history, correct, 620, I'm going to say 580 FICO score, and it really depends on the bank and on the product. 620, 640 FICO score, and your down payment and the ability to bring enough money to the closing table.
Okay, so you're saying that if you already purchased a home and with 3 years prior, you can apply for this program again?
Yes, absolutely.
Okay.
So if you have, yes, ma'am.
I'm sorry. Go ahead.
No, yes, you can. You can. So if you have, the reason I mentioned that is because I didn't want people to think that in stating that it's a first-time home buyers, it mean that, you know, it's only one time. You can only do it one time. And that's not the case.
Okay.
You know, so.
Do they have a limit? And then I'll let somebody else ask questions. Is there a limit on the price of a home that you can apply for?
So FHA do have a limit, price limits, and they vary for different counties and depends on where you are. So you would check that where, depending on where you are. So different FHA have a different limit amount. Fannie may have a different limit amount. So there are limits.
Okay.
Yes, ma'am. So it depends on where you are, what state you're in, as to what that limit is. The limit in Jersey is different than the limit in Pennsylvania, but sometimes there are limits on the purchase price. Yep. You're talking about the price the maximum amount of
And
house
you
you
get
can
to
buy, right?
purchase the house. Yes. The
Yes,
price
ma'am.
of the
Yep.
house. Yes.
Yep.
Thank you.
Thank you.
Anyone else have any questions?
I had a couple, Maurice, if that's okay. This is Mark.
Hey, Mark. Yes,
One
sir.
was like, how do people find you in the first place?
So you can find us on our Facebook page. Is NID PA/NJ. You can find us on our Facebook page, our social media platforms. We're also, if there's for a real estate purpose, you can find us at Progressive Realty and on Facebook, and that's our social media platform. My direct phone number is 610, the office number is 610-439-1527. And we do have a presence on the internet. So if you we definitely can be found there. So I think that's what you were asking, right? I'm not. That was.
No, thank you. I appreciate it. The other question that I had was, about the scores. Like, do you help people find out what their score is before they even start looking for a home?
Absolutely. So one of the things you're gonna find when you most of our real estate agents are not going to take you out to look for a home without having that done. So the first step would be, first you would get pre-approved with a lender first. Then the next step would be to go out and look for a home. So the first step you would take is to get pre-approved first. So, and in that pre-approval process usually is where you determine if there's something you need to work on your credit, and if so, then the process changed. We would begin to work on that process and then come back. I had someone that I just was working with. We started back in January and they needed to wait and come back in October because we started the process. We went for pre-approval. The lender said, hey, you need to wait till something drop off. October came. We got them approved, and they're in the process of looking for something, as we speak. So that's definitely part of the process prior to, and that will be the case with most realtors or real estate agents.
And so my last question sort of related to the same thing, which is, so if they don't have the proper score, you said, they may have to wait. So like, what does that look like, fixing the score? Like, what are the types of things they might have to do?
So the credit score it really depends. It really varies on the individual and what exactly is on the credit. It could be as simple as paying down credit cards. The FICO score and the credit model and the credit algorithm is unique. Sometimes if you can pay, one of the rules of thumb is to have your credit card installment credit cards when you're in the market to purchase. You want to be somewhere down below 30%. You'll notice that an immediate change in your credit score 30 days after you bring your score down to 30%. So if you have $1,000 credit card, you bring it down to $300 and check your score 30 days from now, you'll see a difference. Another thing is judgments. If you have judgments on your credit report, they need to fall off. They have a higher effect on your credit. affect your credit somewhere between 30%. Having a judgment on your credit. Bankruptcy, they need to be off your credit for a certain time period. In order, some banks will want to see 1 year, depends on the type of bankruptcy. So the credit score, that's but the most the most one that I see that is that gets missed is the one of the paying down of your credit cards. And a lot of times individuals will go and pay the credit card all the way off. They think they'll pay the credit card off and I know my score is going to go up. That's the algorithm is set to keep you in the system of paying credit. So no, they don't want you to pay it completely off, pay it down to 10% and then pay the minimum and then watch your score go up. So a lot of times your algorithm, people think, you might think that, I'm gonna pay this off and it's gonna go up, and the total opposite happens. Or you'll pay it off and closing the card out and your score drops. So you wanna consult with the industry expert or that expert on that particular thing, or a lender that has the experience and is willing to work with you on those particular topics. Because not all lenders want to do that. They may have someone that they refer you to, and that's okay. But what you don't want to do is to have a person that does all of that. Maybe seek out the industry expert for that thing that you're working on. So if you're working on the credit, but the first stop would be with a lender, and the lender should point you back to or tell you, hey, if you pay this credit card down, we can approve you. So they have scenarios, but it all starts with your agent and then your lender. So the lender is going to tell you, okay, we're going to run your credit, tell you what we can do. Okay, we can't approve you now. Then they may have something now with technology. They'll have a what if scenario. So what if these things get taken care of? Can we approve them, or when can we approve them if we can't approve them now? So they'll run a what if scenario and come back and say, okay, pay these 2 credit cards off down to 10%, and then we'll be able to qualify you for your mortgage.
That's great. Thank you, sir.
Okay,
Yes,
Mr.
sir.
Bird, I see his hand up. Let me unmute him. Alan Bird?
Yes, I just have a couple of questions.
Yes,
These
sir.
programs you have, are the rates competitive, and are the adjustable rates available?
Adjustable rates available. They are available. I don't see many adjustable rates on single family homes. You might see them on larger loans. They are available. Can I ask you what would be the purpose for adjustable?
But adjustable
So
rate will allow you to qualify for a larger loan and then move it back. I'm not talking about these predatory type adjustable rates. I'm talking about ones that are fair and equal. And based on some experiences, sometimes that's a good way to go.
Got you. Yes, sir. Absolutely. Yep.
I don't know if you have those programs available. Some of these ones that if I saw, 10, 15 years ago when we had the mortgage crisis, those were predatory. I'm talking about some really decent ones from some creditable banks.
Absolutely. They are available. Yes. I just saw one last week, and it was because for a higher loan amount. And that is to your point, that is a better way to go for a higher loan amount. Absolutely. Yes, sir. So they are available, and definitely the rates are competitive. That's a big red flag right now. If you see a rate that's high, right now the rates money is cheap right now. So it's a great time to buy.
One other question, when you're looking at property, now the property condition, is that really critical of what kind of mortgage rates you're going to get? If you have a property that's, I guess, say it's not in a condition when they look at it, is that something that has a bearing on it?
Not on the rate, maybe on the type of mortgage, whether it's going to be a rehab loan or not, but not so much on the rate.
So a property doesn't make much difference on the rate in this type of program.
Well, it would make a difference if the property's in great disrepair. Some properties you only can get hard money loans on, in that sense. Then a hard money loan would definitely be, much, much higher than a regular traditional loan. If that's what you mean. But on a traditional, typical loan, the rate is not going to be affected by the property. It won't be the property that will affect the rate.
Now, you mentioned
My
too,
experience.
you mentioned too in the program, you have to stay in the house for a certain number of years. Would you repeat that number? Was it, how many years was that? When in some
So,
program, you get some program, you get down payment.
It depends on the program. This particular one I was talking about was 10 years.
Mhm.
You know, but it really depends. There's some that has 5 years. There's some that is, you know, forgivable. There's some that's forgivable after 20 years. There's some, it really depends on the program. So again, you know, we're not really selling or promoting any one particular program. We are an intermediary that's going to kind of marry you and put you in contact with help with a program that will work for you. So we're, you know, a HUD intermediary. You know, we are, you know, to help is, you know, we don't have a particular product that we're promoting, you know, in that sense.
Okay. One last question. Are any tax incentives in the Allentown, Lehigh Valley for first-time homeowners, tax credits? I know there were some areas years ago, like Washington, D.C., urban area, that they had tax credits that would be help first-time buyers. Is there something, any programs like that going on right now?
Not that I'm aware of, not that I can speak to right now.
Okay.
I'm not, that doesn't mean they don't exist, but none that I can speak to right at the moment. So,
Thank you.
yes, sir. Thank you.
Are there any more questions? Okay, well, Mr. Mohammed, we want to thank you. We're so grateful that you can come out tonight to give us a presentation on housing, a subject that's really, really needed in our community. There's a lot of people here that will be able to use your service. And
Yes, ma'am.
we also would like to reach out to people, let them know if they cannot reach you, they can reach you through the Allentown and the NAACP as well. And
That's right.
we're glad that you're on our committee, and we look forward to working with you in the future. And I'd like to say thank you.
Thank you. And I'm honored and looking forward to serving. Yep. Thank you for the opportunity.
Okay, so that concludes our program for this evening. I want to say thank you for everyone for attending, and we'll see you next month, third Thursday of the month. Thank you, everyone.
Yes.
Have a great
Thank you.
evening.
You
Good
too.
night.